Hey guys, what's going on? Aaron here. So before I dive into crypto news, the CPI reading, what this means for crypto, I first just want to take a pause and say this week, the last couple days have been a very, very challenging couple days for the country. Multiple things been going on. Charlie, the school, it's been a crazy couple days. So it feels a little odd for me to jump on here and just talk about the economy. But that is why I'm here for the most part. But I just want to address the fact, the elephant in the room, that it's been a very crazy couple days. A lot of division, people with varying ideas on how they feel about things. It's just been a lot. So I just want to start there because I don't want to not address kind of what's happening globally. And obviously today being 9/11, just to add that on top of everything. So the first thing, we got a new CPI reading today, 2.9%. It's the highest level since January. The core CPI moved to 3.1%, but this is just anchoring in the fact that the Fed is going to cut. So ultimately, what happens after the Fed cuts? Well, usually there's some volatility. So we saw a Fed cutting cycle last September for a bit, and we saw multiple 10% drops in Bitcoin even after the Fed cut rates. So short term, like I've been sharing for a while, expect volatility. Always expect volatility. Long term, I know where things are going. Right here, just want to give a shout out to Figure, Mike Hagney's company. They closed 24% above their IPO price after a listing raising $787 million. And now their company is valued at around $6.6 billion. So shout out to them. You can see this pretty huge candle today after their IPO. The S&P 500, new all-time high. We are seeing a drop in the 10-year, the 20-year, and the 30-year. Essentially, people are again pricing in rate cuts. Gold is a little bit below its all-time high, but still pretty close. I think gold is going to rip just like Bitcoin. We are seeing some inflation, but it's not at a level where the Fed won't cut, especially with what's going on with the labor market, and they need to cut there. But I think gold and Bitcoin are going to rip. We're seeing some inflation and rate cuts, which is a really, really great catalyst for increasing the price of gold. We got some big news regarding BlackRock wanting to tokenize some of their ETFs, which is pretty interesting, right? I first want to chat about iTrust Capital. So if you don't know about iTrust, I have a Roth retirement account there. You can see I have just under $20,000. And personally, it's all in Bitcoin, but you can roll over a retirement account. You can start a new one. You can do whatever you want. And they have all of these different altcoins as well, if you would like to include those in your retirement account, including physical gold and silver. They also have a new custody account, which gives a lot of security over what you get at Coinbase or Gemini. And if you're curious where they hold your crypto, it's going to be with some of the largest names: Fidelity Digital Assets, Wells Fargo, Fireblocks, and Coinbase Prime. And if you want to check it out, you can use the promo code Bennett7, where you are going to get a $100 funding bonus once you fund your account. So personally, I think Bitcoin is just kind of chilling out. We are seeing treasury companies go up. We are seeing possibly the beginning of an altcoin cycle or a second one if these rate cuts go as planned. Taking a look at Bitcoin though, 114,400. It's doing pretty well. Ethereum, $4,400. So the major coins are holding up pretty well. There's a lot of volatility when it comes to smaller coins, as always, because they just have a smaller market cap. So let me take a look really quick right here. BlackRock, love them or hate them. BlackRock is exploring how to make ETFs, exchange-traded funds, available as tokens on the blockchain. The firm is working on tokenizing funds tied to real-world assets such as stocks. Tokenization could mean trading beyond Wall Street's set hours. So I think this is pretty interesting, allowing people to invest in stocks and ETFs through BlackRock, which is a very trusted name, and doing so where they can then buy them 24/7. I made a video a few weeks ago how you can already trade stocks on Kraken. US clients can now invest in over 11,000 stocks and ETFs directly in the Kraken app. So this already exists, but BlackRock, being enormous, they want to get their hands in it and make money from it, which is fine. I think competition is a good thing. And finally, right here, money market mutual fund assets are at a record $7.3 trillion. So there's never been more money sitting in money market accounts. Once the Fed cuts rates, my guess is that they're going to have to take their money out of money market funds because they're not earning enough and put them into stocks, most likely ETFs, most likely kind of broad range funds like that. So, in my opinion, this is a bullish thing. We're seeing an insane amount of cash being stacked. It's over double where it was in 2018, which is insane, right? So let me know your thoughts below in the comments about what I'm talking about in this video: BlackRock, money market funds, interest rate cuts, and also PPI, all that stuff. But if you want to talk about what happened this week, there's just been a lot in the news. I would encourage you to please just try to stay respectful in the comments. I'm not going to delete your comments, but you can talk about whatever you want, guys. So as always, I hope you are doing well, and I hope that life is treating you as well as possible. Till next time, talk with you soon, and bye for now.